Good morning, y'all. I'm Catherine Ross. I'm here on the floor of the NYSE with Jim Cramer. Jim, you wrote a Real Money column this morning about earnings and how they should help the market rally. What are your thoughts there?
These are financials that I'm talking about, and what I was really focused on in my Real Money piece was the idea that these stocks, the banks have fallen so low that it really is kind of unfathomable. In my career, I've never seen them like this other than when they're about to go broke. And what we're seeing is they actually have a lot more growth than we realized. People always felt since the Great Recession, all people looked at was net interest margin. And now you have to start looking at growth. When you have Goldman down from 250 down to some hideous level, total bear market, and then Goldman delivers very good growth and has very good tangible book value, making on tangible book, you have to start saying that maybe this is mispriced. And so what I think, JP Morgan was mispriced. Now, if JP Morgan had been at 118 before the quarter and they missed, yes, it would come down. But when we look at these companies, we have to start thinking, did the market go so low that even if companies miss, they go up, and if companies succeed, they really go up in this particular group? And I think that financials being leadership, I almost want to see MasterCard and Visa to go down to see if there's a switch from FinTech to Fin. The acquisition, the Fiserv FTC, is about creating a great FinServ tech. And what I really want is to see Fin do well. And Bank of America was best in show. That was a great number.
And let's talk about Goldman Sachs, because that's an Action Alerts Plus holding name,
yes.
And it's also Real Money's stock of the day. Now, I was talking to Real Money's Kevin Curran this morning.
Who just is so good. So good.
And we were chatting about how analysts got the estimate so wrong. What's your insight there?
Well, I think that Solomon is much better than people realize.
DJ Diesel?
Yeah, oh right, he's a DJ. Yeah, that's kind of nutty. But one of the things that he's able to do is tell a good story. And this is very important. People have to recognize when you get a CEO who can tell a story on a conference call, it changes things. Now, Goldman's conference calls have been very convoluted and frankly emphasize the negative, which, look, I'm not saying conference calls be promotional. I am saying that if, as a shareholder, you don't want to hear things being put in a negative light. Now you could say, well, wait a second, Jim, you do that for Action Alerts. Absolutely. I'm in teaching mode. I want to teach about why I got TechStron wrong. Tomorrow at 11:30, you'll hear how I got things wrong. But it's not the job of the company to tell you how they got things wrong. You disclose. And let people figure it out. You don't say, listen, and this guy did really well, Cramer did really well, and that's why the security sales did well. No. What you do is you say, okay, here's securities. Oh, here's what we're doing wealth management. And Goldman was saying, here's what we're doing wealth management, it's bad. And you would say to yourself, wow, they have no confidence. And it's a confidence business. So it's like listening to an NFL coach after a loss, and someone says, do you think you make the playoffs? And they said, playoffs? We can't even win in the regular season. So this was a very important call. Also, I think that the Malaysia, they can't put it behind them, but they certainly did make you feel like if you've been selling the stock off Malaysia, well, you sold it 80 points too late.
Now, this is one of the longest shutdowns we've seen, and I'm wondering, sorry, we have to talk about it.
Shutdown. I'm saying 2 paychecks that people miss. Sadly, we're a paycheck-to-paycheck country. Unless you own a small business, you don't understand that. And a paycheck-to-paycheck country, it's the people who are being hurt by this wall, whether you like the wall or hate the wall, are just collateral damage to a miserable situation in Washington. And, Washington's pathetic.
Are we seeing a retail impact from the shutdown?
We will. Now, I know that Jamie Dimon was very, very negative about what could happen. There's a good piece in the Journal about the payments. I was looking at the Action Alerts portfolio. I said, geez, maybe Raytheon's going to be impacted. Maybe there's consulting fees that aren't going to be paid. Now, we typically have said that, well, you know what, it's all going to be made up. That's typically has been the rap on a shutdown. But that's because shutdowns were short. Now you're not going to make it up. There's just people who just can't spend as much because they don't have as much. And it's really, it's disgraceful. It's disgraceful on both sides. And I know both sides. And it's so divisive. It's just almost 1853 down there.
Let's speak about retail a little bit more.
Yeah,
because
let's do that.
Sears.
Nordstrom. Oh, I'm so glad we
Sears.
sold Nordstrom so high. That was like one of the best.
We're going to
things
talk
we
about
do.
that on Action Alerts
Yes,
Plus.
I'm so glad we sold that. No, I'm not trying to be like the new Goldman telling the good stuff, because we've also got CVS. I said on air it's been disaster, but I still think it's going to work out big. and patient. Again, when I look at what's going on with Sears, Eddie Lampert is Captain Ahab at this point. You know,
And he won his $5.2 billion
And I'm sure that
bid.
there's something in there that makes it so that he does well, because Eddie does well when the employees do badly. There, I said it.
All right, so tomorrow morning, you have your Action Alerts Plus call at 11:30 a.m.
Yeah, it's really important. And we're going to reveal the 10 things we learned from the bear market, and include good and bad.
And a new bullpen?
A new bullpen name that I think is extraordinary.
I don't know what it is, so I'm
And
excited.
I can't wait till it comes down. One of the things we learned and we did right was that we had the bullpen ready. And we circled the wagons around the good ones. And we had bullpen names that were ready during the decline. We sold companies that we upgraded. Remember, we don't have new money coming in. I mean, I used to, the charitable trust is a finite amount of money. And we've given away, more than a couple million. And we still, but I don't put $1 million in it each year. And so we're finite, so that when, you have to sell something to buy something, basically. Also, we can't have that many names. And so what we did was we upgraded into the bear, which is what you want to do. But it is unique. And a lot of people who follow us also don't have it. It's not like they can keep putting new money in. So it's very simpatico with the people who subscribe. It's funny. I was doing some work on some other sites this week. There's hundreds of thousands of people. I'm saying, what do they give? And I'm looking at the offerings. It's really pathetic versus what we give on this thing. I say this because my wife says, "Oh my God, the call's coming up." I guess you can't help it. We were at Longshoreman last night. She closed it. I was asleep by the time she came home. It could be interstitial last night. And what strikes me as ridiculous is the amount of work I put in on this call versus what I used to do in my hedge fund. But when I look at the other offerings from so many other different entities away from CNBC, we have a lot of good entities, but with the paid entities, I don't know how they must do some sort of crazy marketing, because I am telling you, I'm giving you everything I have, and I've been around trading since '79. And I'm just, I'm naked about this. I don't know what the other guys offer that they have so many more subs than we do. I'm giving them all she got.
All right.
11:30 tomorrow.
11:30 a.m. tomorrow, Thursday, January 17th, and you can find it on actionalertsplus.com. Thanks for joining, y'all. I'll see you tomorrow.